Alright, hi everyone. Welcome to today's webinar brought to you by IC Markets. Alright, thanks everyone for tuning in. Before we start today's live analysis session, let's take a quick look at the disclaimer. Right, please take note that this is marketing communication and does not contain and should not be construed as containing investment advice or an investment recommendation or an offer of or solicitation for the transactions in financial instruments. Also, please take note of the risk warning that comes with trading forex and CFDs, as they carry a high level of risk to your capital and you should only trade with money you can afford to lose. Right. My name is Ketan Ramachandra. So this webinar series is brought to you in a special partnership between IC Markets and Everest Fortune Group, where we have been the finalists for Best FX and Equity Research for the following years, 2019, 2020, and 2021. Right, before we start today's live analysis session, I will take a quick look at some of the key economic events that are up this week. Right, we've got inflation data out of Canada tomorrow, 21st of May, followed by the RBNZ cash rate statement as well on Wednesday, as well as the minutes of the FOMC meeting that took place earlier this month as well. Right, and after that, we'll dive into the chart and trading view and see what are the current support and resistance levels for today. Right, here's the calendar from Forex Factory. Take note, I'm on GMT time. Right, so tomorrow at 12:30 p.m. GMT, Tuesday, 21st of May, we've got CPI data out of Canada. As you can see, across the various CPI indicators, whether it's median CPI, trim CPI, or common CPI, on an annualized basis, you can see that the forecast for the month of April is pointing to further easing. Right, so you can see these are the figures for the month of March. So median CPI is expected to edge lower from 2.8% to 2.7% year over year. Trim CPI is also edging lower from 3.1 to 2.9%, and of course common CPI as well, 2.9 to 2.8%. So it's a step in the right direction. Inflationary pressures do look like it's continuing to dissipate further in Canada, which is likely to cause the loonie to come under pressure. So if the loonie comes under pressure, we could see the dollar CAD get a potential lift following the release of this inflation data out of Canada. Then later on as well at 5 p.m. we've got Bank of England Governor Andrew Bailey speaking as well, right? So if he touches on monetary policy action or the outlook of future monetary policy action, that's likely going to impact the pound as well. And then moving on to Wednesday, 22nd of May at 2 a.m. GMT, the RBNZ will release its monetary policy statement, where they're expected to maintain the official cash rate at 5.5%. An hour later at 3 a.m. GMT, the press conference will commence, and that's where we could see further insights into the RBNZ board members as well, right? Further insights from them as well. All right, okay, and then we've got the FOMC meeting coming up at 6 p.m. later on that day on Wednesday, right? Should we see, and this may give us further clues as to what were the deliberations that took place during May's FOMC meeting, right? So should we see further dovish communication in these minutes, it could likely to it's likely to cause the US dollar to come under some selling pressures as well. Right, and then on Thursday we've got composite PMI data for France, Germany, the Euro, and for the United States as well. And then on Friday we've got retail sales out of the UK, followed by durable goods sales in US as well. Right, so it's quite a heavy calendar. But let's just take a look at CPI. Canada's inflation data. You can see on the left I have the chart for headline CPI, and on the right I have the chart for core CPI, both of which are on an annualized basis. Right, headline CPI has been relatively flat over the last 3 months, coming in at about 2.9% year over year, whereas core CPI has really started to moderate even lower as well, coming down to as low as 2% in the month of March. So CPI inflation data in Canada is headed in the right direction, and especially when we look at the trim CPI, which is the Bank of Canada's preferred measure of underlying inflation, we can see that over the last 4 months it has trended significantly lower as well, coming in at 3.1% for the month of March. And as we saw earlier on the forecast on Forex Factory, right, all the various CPI indicators are pointing to further deceleration or further easing, which is likely to cause the loonie to come under pressure, right? So if the loonie comes under pressure, dollar CAD is likely to receive a boost on Tuesday. Right, looking at PMI data as well for Canada, right, we can see on the left I have the chart for manufacturing PMI, on the right is services, right, is a reading below 50 indicates contraction, whereas a reading above 50 indicates expansion. You can see the economy is not, or at least looking at the PMI outputs for manufacturing and services, right? It's not doing that great, but you can see they're not that far off from expansion either, right? So it's not in a ideal economic output is not produced coming in strong as expected over the last few months, right? But it is still coming in at a pretty steady growth rate, right? Then looking at the Reserve Bank of New Zealand, right? So the current level of the cash rate stands at 5.5%, right? This was they held the cash rate on hold for the sixth time. So come Wednesday, should they keep the cash rate at 5.5% once again, this would mark the seventh consecutive time that they would have done so, right? So while the economy, the New Zealand economy remains weak, inflation is still relatively high, right? It's still well above their target of 1 to 3%. Now, when we look at CPI data in New Zealand, on the left, I have the chart for headline CPI. On the right, I have the chart for core CPI. You can see they're all trending lower, right, heading in the right direction. But of course, with headline CPI at 4% in the first quarter of 2024 and core CPI at I would say 3.5% in the first quarter 2024. It's well above their target of 1 to 3%. Despite inflationary pressures continuing to trend lower, it is still it's not it has yet to reach the RBNZ's target of 1 to 3%. That is why they are very likely to keep the cash rate on hold, but they may project a very dovish outlook, right? So the statement and the press conference could have very dovish communication, which would then potentially cause the Kiwi to sell off, right? So they may not cut rates, right? The RBNZ may not cut rates on Wednesday. However, the potential dovish statement and press conference should be more than sufficient to cause a pretty strong sell-off in the Kiwi. Right, and when you look at PMI data as well, on the left we have manufacturing PMI, on the right services. You can see here, right, they're both below 50, right? Especially for manufacturing, it's been below 50 for throughout pretty much the whole for the past 12 months, whereas for services it's been more patchy, going into contraction and expansion, or sliding between contraction and expansion. So you can see generally the economy has been pretty weak over the last three months in Canada and in New Zealand. So despite the weak GDP output, maybe they're not going to cut rates just yet to boost the economy. But remember, any dovish language by in the statement and during the press conference is likely to cause the Kiwi to sell off, right? And you can see here, New Zealand's economy has actually entered technical recession. That means when we have 2 consecutive quarters of negative growth, which is what we saw in the third quarter of 2023 as well as the last quarter of 2024, right? So New Zealand has already undergone technical recession, right? Just whether we can see a rebound in economic activity in the first quarter of 2024. All right, with that, now let's move on over to the slides on TradingView. We'll start our analysis on the dollar index, and of course, should you have any requests for any other currency pairs or commodities or indices, do let me know in the chat box, and I'll be more than happy to go through the analysis with you. All right, let's start, of course, with the dollar index. I'm on the daily time frame here, so we can see today actually the dollar index has not done much, right? It's European markets are mostly closed as well. It's a bank holiday in Switzerland, I believe the UK, France, and Germany as well, right? So most of the major European markets have been are closed. So that sort of tells us why market or trading activity and volume has been relatively subdued throughout the day so far. But things could pick up as US markets come online. But generally, you can see today that the dollar index pretty much has been unchanged, just hovering around 104.45, right? It's been ranging between about 104.40 and as high as about 104.50, just in a very tight very tight range of 10 pips. It's pretty much not done anything all day long so far. Well, that could change should once US markets come online. Right now, that's why you can see the current candle, right? There's not much movement here, with most European markets being closed for a bank holiday today, right? Okay, so now we can see that since the third week of April, the dollar index has been in a strong downtrend, right? We can see this is highlighted by the bearish channel. It has tested the upper trend line of the bearish channel several times, as well as the lower trend line too. Now, so the upper trend line of the bearish channel plus this overlap level here at 104.97, which has been identified as the pivot, helps us identify a major resistance zone as well. Right, this is actually a pretty significant overlap resistance because it first was a swing high resistance in mid-February, a second swing high resistance in early March, and then after that proceeded to function as support. Right, of course we can see the bottom of this wick dropping as low as 104.50, but generally you can see the body of the candle on the daily time frame has managed to stay above this level here. So this was previously functioning as a strong overlap support, which is now going to function as a potential overlap resistance. And we have this overlap resistance plus the upper trend line of the bearish channel highlighting a major resistance zone along with the 38.2% Fibonacci retracement. Right, so this retracement was found by starting from here, this high on the 16th of April, going down to the low last Thursday, right? And we can see that 38.2% Fibonacci retracement aligns very well with the overlap resistance, which is the pivot, and we can also see that the 61.8% Fibonacci retracement aligns very well with our first resistance. And the first resistance is also another overlap level. Right, we can see previously this level at 105.57 functioned as a pullback support from 23rd of April till the 1st of May, after which it proceeded to function as resistance in the second week of May here. So thus creating an overlap resistance level, which also has the presence of a 61.8% Fibonacci retracement. Right, so this is the key resistance level and the pivot here. So although dollar index is trading within the bearish channel, right, it could retrace higher as well, right, especially after a strong move down over the last since Monday to Wednesday, right? Last week we saw 3 strong days of selling pressures in the dollar index, which could mean that we might see some retracement to the upside. Remember, as short sellers close out their trades, right, they have to buy back the position. That could cause the dollar index to at least retrace a little bit higher, and should that happen, it's quite likely to run into resistance around the region that's highlighted by the upper trend line of the bearish channel, the pivot, which is an overlap resistance, as well as the 38.2% Fibonacci retracement, right? Now, should price retrace up towards this level here, it may help us identify a potential short entry for the dollar index. Conversely, if you're going to go long on the dollar index today, right, try to capture this small retracement to the upside, right, then any take profit level for the long trade should be identified around this resistance zone as well. Right, so these are the key resistance and pivot levels for the dollar index, and of course the first support is at 104.09, which is this pullback support level here that has been in place since the 26th of March, right? You can see dollar index bouncing off this level here on 26th of March, then again in the first week of April, then of course as recently as last Thursday. And at the same time, when we run a Fibonacci retracement starting from this swing low here on the 8th of March going up to the swing high here on the 16th of April, we can see that there's a presence of a 61.8% Fibonacci retracement at this level as well. Right, so it's going to take quite a lot of intense selling pressures for dollar index to break through this level, right? And if we see upcoming economic data, right, if you see PMI data and durable goods orders start to come in weaker than anticipated, right, that could be sufficient to cause the dollar to remain weak as well. All right, so these are the key levels for the dollar index on the daily time frame. Right, let's switch on over to the 4-hour time frame and see if we can fine tune the analysis if necessary. Right, I think pretty much not. I think pretty much this is good. I think if anything, I'll just try and see if we can use one more retracement here, starting from this high on 9th of May, going down to the low here on the 16th. Right, let's pull up the fibs. Right, okay, we can see that there's a 50% Fibonacci retracement that sits quite close to the pivot, so let's just keep 50%. Right, really this adds further significance to the resistance of this area here. Right, let's see, there's a Ichimoku cloud as well. All right, oops, the cloud is not so clear. Let me try and make this a little bit better. Right. We can also see the presence of a bearish Ichimoku cloud. Remember, when the cloud is red in color, it indicates bearish momentum, and the cloud itself can identify areas of resistance as well. Right, just as how a green Ichimoku cloud, which indicates bullish momentum, the bullish Ichimoku cloud can also help us identify areas of support. So conversely, the red Ichimoku cloud can also help us identify areas of resistance, which is what had happened around this period as well. So as the dollar index was retracing higher in the first and second week of May, it sort of ran into resistance around the bearish Ichimoku cloud and then proceeded to reverse, consolidate for a while before dropping lower, right? And of course, it ran into resistance where the upper trend line of the bearish channel sits, and also at where the clouds was situated as well. Right, so once again, right, we could see dollar index retrace higher, and we have this ascending trend line, or rather the upper trend line of the bearish channel, the pivot, the bearish Ichimoku cloud, the 50% Fibonacci retracement, as well as the 38.2% Fibonacci retracement, all pointing to a potential, to a major potential resistance zone at around 105, right? So this is where major resistance is. So any long dollar position that you may have, or DXY position that you may have, right? A suitable take profit level would be can be used can be identified at this major resistance zone. Similarly, if we see the dollar index stall around this level and then reverse the drop lower, it would help us identify a potential short entry as well. And of course, should we see the dollar index reverse of this level and drop lower, we would be looking at around, I highlight this as an intermediate support level, right? And should we see the dollar index let's just hypothesize or imagine that the dollar index retraces higher, runs into resistance around the pivot and bearish Ichimoku cloud, and reverses the drop lower. Should it reverse, we have a potential short opportunity on hand, and then I would use this intermediate support at 104.40 to identify my first take profit level, and then the second take profit level for the short trade would be identified at the first support at 104.10. Right, okay, so these are the key levels for the dollar index on the 4-hour time frame. All right, let's move on over to uh, the dollar CAD, right? Since we've got inflation data out of Canada tomorrow, then we'll cover Kiwi as well, and of course, any other requests that you may have. All right, so let's look at dollar CAD. Let's start with the daily time frame first. Right, so similarly, if dollar index is falling over that period, dollar CAD is also expected to be sharing the same trend, right? So we can see here it's also trading within a bearish channel, right? It's also trading within a bearish channel here. So today, once again, there's not much movement, right? With European markets closed, but we will see more activity as US markets come online. But yes, current as of now, the dollar CAD is trading around 1.3613, right? It's just sort of consolidating around this area here, right? So first major support for dollar CAD comes in at 1.3520, which is this pullback support level that has the presence of a 50% Fibonacci retracement, right? We started this retracement from here, this swing low on 27th of December going up to this swing high here on the 16th of April. We see the presence of a 50% Fibonacci retracement aligned very well with our pullback support level here. With regards to the pivot has been identified as a pullback resistance. Previously, this level functioned as support at the end of April, and as well as in mid-May before breaking underneath here. So what was previously a pullback support level could now potentially function as resistance. And of course, the first resistance has been identified at this pullback level at 1.3725, which has the presence of a 50% Fibonacci retracement. So this retracement started from this swing high here on the 16th of April, ending with last Thursday's low here. Right, so these are the key levels for dollar CAD on the daily time frame. Remember, if we see inflationary pressures continue to dissipate in Canada, that's likely going to cause dollar CAD to to move higher as well. So softer inflation data out of Canada is likely to function as a potential bullish catalyst for the dollar CAD, and that means we are likely to see it at least push up towards the pivot here, and perhaps maybe if it's even strong enough, we may see a potential bullish breakout occur through the pivot as well. Right, let's now look at the 4-hour time frame and see if we can fine tune the analysis. Okay, we can add another Fibonacci retracement, this time starting from this swing high here on the 8th of May, going down to the low last Thursday. I believe there's a 38.2% Fibonacci retracement that we can use. Yep, there's a 38% around here. Let's just highlight this zone. So we have the presence of a 38.2% Fibonacci retracement, this pivot level here, and also the bearish Ichimoku cloud, right? You can see the bearish Ichimoku cloud being formed here as well. Now this pivot on the 4-hour time frame is not as clean as what we saw, but generally you guys can see the get the picture as well, right? If I just try to clean it up, you can see over here dollar CAD finding pretty decent support here on 10th of May, and then again on 15th of May before moving under, and then running into resistance here on 17th of May as well. So that's creating an overlap level, right? A pretty decent overlap resistance level here. So we have this overlap resistance at 1.3650, the bearish Ichimoku cloud, and a 38.2% Fibonacci retracement, all pointing to a potential resistance zone. Now, dollar CAD looks to be rising today, so should we also I see an intermediate support level at around 1.3590, right? So should you go long on dollar CAD today, right? Placing your stop loss just slightly below 10 to 15, about 10 to 15 pips underneath this intermediate support would be a decent level to identify as a stop loss. And then of course any long positions, right, we're going to be identifying the take profit for the long positions around the region of 1.3650. Okay, right. So these are the key levels for the dollar CAD on the 4-hour time frame, right? Take note, we do see dollar CAD rising, starting to rise today, right? It does look like there's a pretty decent intermediate support at 1.3590. So this level here, we would use this level to identify a stop loss that's going to be placed about 10 to 15 pips underneath the intermediate support, and of course the take profit would be identified at around the pivot and the bearish Ichimoku cloud. All right, let's move on next to the Kiwi, right? Since we've got the RBNZ coming up on Wednesday, let's take a look at this currency pair. All right, okay, so looking at the Kiwi, right, since end of April, we can see it's been in a relatively strong bullish channel, right? It's bounced off the lower trend line of this bullish channel several times, and it's run into a little bit of resistance at the upper trend line as well. But generally, you can see the bullish momentum is still intact, and where it could potentially run into resistance could be at this pivot level at 61.76, which is identified as a pullback resistance that has occurred in the first week of March, and as well, this level also has the presence of a 61.8% Fibonacci retracement as well, right? 61% Fibonacci retracement here. So this retracement was found by starting from this swing high on the 28th of December, going down to the swing low here on the 19th of April, right? So we have two factors that point out a major resistance zone, right? We have the pullback resistance itself here that occurred on the 11th of March, as well as the Fibonacci retracement at 61.8%. Now, come Wednesday, should we see a very dovish statement and press conference by the RBNZ, that should be more than sufficient to cause the Kiwi to perhaps stall around the pivot and then reverse to drop sharply, right? And of course, if we see any surprise rate cuts by the RBNZ, that is very likely, of course, going to cause a pretty significant sell-off in the Kiwi, right? So take note, we could see the Kiwi at least retrace higher in the first half of this week, probably retrace up towards the pivot level here, and then once the RBNZ releases its monetary policy statement, right, and should that statement and press conference be dovish, we are likely to see the Kiwi stall around this region here, which is around 61.70, and reverse to drop pretty sharply as well. All right, next resistance level for the Kiwi comes in at this overlap at where the 78.6% Fibonacci retracement sits. There's the presence of a 78.6% Fibonacci retracement. Plus, we can also see the Kiwi finding pretty decent support here on 21st of December, after which it this level here function as resistance in the second week of Jan as well, so thus creating an overlap resistance level that has the presence of a 78.6% Fibonacci retracement. Right, with regards to the first support is a overlap level, right? We can see price making a pretty decent support here in the first week of March, and then running the resistance here on 20th of March, and then as it was retracing higher in April, it ran into resistance once more. So we have a very significant overlap resistance level here, which was finally taken out last Wednesday. So what was previously an overlap resistance level could now potentially function as support. So that's how the first support has been identified. Right, okay, let's see if we can fine tune the analysis. Let's so move on down over to the 4-hour time frame. You can see quite clearly, right? Kiwi trading very nicely in a bullish channel. And is also trading above the bullish Ichimoku cloud on the 4-hour time frame as well. Right, so I do see a couple of intermediate levels here that I would like to highlight. As an intermediate resistance level at 61.38, as well as I see an intermediate support level at around 61.03. Now these levels can be used to give us further clues as to the direction of the Kiwi, right? So should we see the Kiwi break above this intermediate resistance at 61.38, we may have a potential bullish breakout on hand. So if we do see this bullish breakout take place, right, then we would then target the region of the pivot at 61.76 as a potential take profit level. And because this is an intermediate support at 61.03, I would place the stop loss at about 10 to 15 pips underneath this intermediate support level for any long Kiwi trades as well. Conversely, right, should we see the Kiwi stall over the next couple of days and perhaps break underneath this intermediate support, right, then this would give us a potential opportunity or a potential bearish breakout opportunity, right? And should that bearish breakout occur, then of course I would place my stop loss slightly above this intermediate resistance at 61.38. So perhaps 10 to 15 pips above this intermediate resistance would be a suitable stop loss for any potential bearish breakout as well. And should that bearish breakout occur, right, I'll be looking at a suitable take profit level that's bounded by the lower trend line of the bullish channel, the bullish Ichimoku cloud, and the first overlap support as well, right? So three factors here that point out or highlight a strong support zone, and that's where your take profit level should be identified as well for any short Kiwi trades. All right, okay, so this is what we have for the Kiwi. These are the key levels here. All right, let's move on to gold. Okay, let's touch on commodities now. We'll move on over to gold and we'll cover crude oil as well. Right, so once again, let's start the analysis on the daily time frame for gold. So last week, right, on Friday as well, right, we saw that's a pretty strong resistance as well. I'd just like to highlight this level here as well, right? This was a pretty strong pullback resistance, right, that was in place since 18th of April, right? You can see here on Thursday, gold prices stalling around $2,390 per ounce, retracing lower before finally breaking out of this pullback resistance on Friday, right? Very strongly. We had a strong bullish breakout that occurred, right? And then we can see that bullish momentum continuing today as well, right? With gold prices briefly climbing above $2,500 per ounce earlier this morning, but it just seems to have stalled out now. Right, so we have a potential bullish breakout currently going on for gold prices here, and because gold is trading very close to new all-time highs, right? This is a new all-time high for gold, right? Let's just highlight it here, right? $2,450 per ounce is the new all-time high for gold prices here. So of course we have nothing to reference in the past, and we don't have any other pullback resistance or swing high resistance or overlap levels that we can identify as potential resistances. So we have to rely on Fibonacci tools. So in this case, we are relying on a Fibonacci extension. This extension is found by running a retracement. So we started the retracement from here. This high on the 12th of April. Remember, this was the previous all-time high on the 12th of April. Going down to the low here on the 3rd of May. Right, we are using the extension levels at 127%. And of course, the other significant extension level is at 161%. Now, should you be long gold, right? identifying a take profit level close to this first resistance where the extension at 127% lies would be a suitable area to identify as a take profit zone as well. Right, similarly here, this pivot has been identified as a potential pullback support. So should we see gold prices pull back over the next 1 to 2 days or in the first half of this week, this pullback level at 2,410 could be a potential buying opportunity as well. Right, so after seeing this bullish breakout occur, gold prices could look likely to continue to climb higher. But remember, of course, any pullbacks are likely to be supported at this pivot level here. And of course, resistance has been identified at the 127% Fibonacci extension. Right, there's also a pretty, I think, decent trend line as well, right? Okay, ascending trend line here. And okay, these are the key levels. First support is an overlap level here at $2,374 per ounce. All right, now let's go on over to the 4-hour time frame and try and fine tune the analysis. Right, so we can see here, right, this was the new all-time high for gold prices that was set during the Asia session. Pullback support here, right there. See on the 4-hour time frame, we can see this pullback support, or we can appreciate this pullback support much more easily, right? You can see this was resistance here on 12th of April, resistance on 19th of April, before finally breaking out. So now we have a potential pullback support level here at $2,412 per ounce, right? This level here is a nice, pretty decent overlap support level at 2,374 as well, right? The gold prices running the resistance here on 10th of May, and after that proceeding to find support on the 16th of May before bouncing higher. So it's another overlap level here, right? Now we can also draw another Fibonacci retracement. This time we can run this retracement from here, this low on the 3rd of May, going up to this morning's high. Let's pull up all the fibs. Right, we can see that the pivot, right, which is the pullback support level, has a presence of a 23.6% Fibonacci retracement. And we can also see that the first support is sort of sandwiched in between the 38 and 50% as well. Right, so perhaps I think I'll just use the 23 and 50. And then I would highlight this as a support zone as well. Right, remember, we have the presence of a ascending trend line. We have this overlap support level and the 50% Fibonacci retracement, highlighting a very strong support zone. And we have this pivot, which is a pullback support, and the Fibonacci retracement at 33.6%, identifying a potential pullback opportunity as well for gold. You can see here on the current 4-hour candle, gold prices are pulling back slightly. So should it come drop down towards our pivot at $2,412 per ounce, right? And if it stabilizes around there, that may help us identify a potential opportunity to go long on gold as once again. And should we see that bullish bounce occur, then I would use the intermediate resistance, which is the current all-time high at 2,450 as my first take profit level, and the second take profit level is identified at the extension at 127%. All right, so these are the key levels for gold. Right, anything else for gold that I can see? No, probably not. All right, then let's move on over to crude oil. Right, XTI USD is the instrument that tracks the WTI crude oil futures. Right, so since mid-April, this commodity has been trading in you can see it's been in a downtrend, making a series of lower highs, series of lower lows. I would say we probably have a pretty decent bearish channel as well. Let me see. I think we may have a case for a pretty decent bearish channel. Right, yeah, we still, yep, there we go. It's pretty good bearish channel here. Right, so not only is WTI oil trading within the bearish channel, right, we also see pullback resistance level at $81.38 per barrel. Right, previously this level at $81.38 was a strong pullback support in the 3rd week of March, and then finding support again in the 3rd week of April. Now after, of course, breaking underneath this level, what was previously a pullback support level could now potentially function as resistance. So we have the presence of a pullback resistance, the upper trend line of the bearish channel, and a Fibonacci retracement as well. right? So this retracement at 38.2% was found by starting from here, this swing high on the 5th of April, going down to the low of last Wednesday. We can see that there's a 38.2% Fibonacci retracement level that aligns well with the pullback support or pullback resistance, sorry, and also we have the presence of the upper trend line of the bearish channel, which itself can also identify a major resistance zone, right? So any long oil positions here, right, a suitable take profit level should be identified within this resistance zone that's bounded by the upper trend line of the bullish bearish channel, the pullback resistance, and the 38.2% Fibonacci retracement, right? Okay, support is very clear as well, right? We see strong support here, crude oil finding strong support here in the first week of March, and of course after falling sharply since the second week of April, WTI oil has stabilized around $78 per barrel here since 3rd of May till last Wednesday, 15th of May, finally stabilizing around this level here before looking to rebound higher, right? So quite clearly $77.88 is a very strong pullback support level. Aligns very well with the pullback support here. Now, should we see crude oil prices reverse and drop lower? That's what we're currently seeing. So should you have any short WTI oil positions, right? Targeting your take profit at around the first support or the vicinity of the first support and the 61.8% Fibonacci retracement would be a good idea to identify a suitable take profit level for any short WTI trades that you may have. All right, so these are the key levels on the daily time frame. Of course, the first major resistance is highlighted at this pullback resistance at $84.38, which also has the presence of the upper trend line of the bearish channel and including a 61.8% Fibonacci retracement. So this retracement started from this swing high on the 5th of April, going down to the low here on the 15th of May, right? We can see the 61.8% Fibonacci retracement aligned pretty well with the pullback resistance at 84.38. Plus, we also have the upper trend line of the bearish channel highlighting a major resistance zone. Okay, let's move on down to the 4-hour time frame and see if we can fine tune the analysis if necessary. Right. Okay, I also would say there's a pretty decent ascending. Okay, it's not the best ascending trend line, but okay, maybe they are not really the best ascending trend line, so I'm not going to keep that on here. Right, but okay, so you can see based on the 4-hour time frame, I'll just try and fine tune the analysis. First support, right, just fine tune it a little bit. Here, so we're going to use the body of the candle and just pull back here on 11th of March, which also sits quite squarely with this pullback here on 15th, right? So we can see based on the second 4-hour candle as well, on the current 4-hour candle, crude oil does seem to be heading lower, right? So this may present itself as a potential short opportunity as well. And because this is the high of today, right, at about $80.50 per barrel, I'd place my stop loss slightly above this intermediate resistance here, or this pullback here, perhaps maybe about 10 to 20 cents just above this level here may be sufficient enough, and we may get a potential short opportunity for crude oil here, right? We can run a Fibonacci retracement from this leg here, this upward leg, 15 May to here, and then I can see that where the 50% Fibonacci retracement lies, and there's a strong pullback support as well that occurred last Thursday. So this is where I would identify my take profit level for any potential short WTI oil trade. So take note, right? WTI oil made a high of $80.47 earlier today, right? We can use this level here to help us identify a suitable stop loss level, perhaps 10 to 20 cents above this high, and then we can target the 50% retracement and this pullback level at $78.50 as a potential take profit for any short WTI oil trades. Alright, so these are the key levels that we have for WTI oil on the 4-hour time frame. I think that's pretty much it. Right, you can see it is still trading within the bearish channel. Of course, okay, it didn't quite reach the upper trend line of the bearish channel, but generally we can see that price action does look to be heading south, and if it does continue to move lower, right, we can target the intermediate support at $78.40 as a potential take profit level, and my stop loss, I would probably place it just about 10 to 20 cents just above this intermediate resistance at 80.47. I do not wish to keep a very wide stop loss for this, but it is a pretty decent level to identify because it's within the area of a major resistance as well. All right, okay. Right, moving on, we've covered a bit of the major forex pairs, commodities. Let's take a look at the indices, right? Let's start with the US 500, right? This is the instrument that tracks the S&P 500 futures. So we can see this has made a new all-time high as well. Right, so previously the US 500, for the US 500, this level at 5,313 was the previous all-time high, which was taken out last week. Right, and price and equity markets, US indices do look to be pushing higher as well. Now, so where it could potentially run into resistance is at this Fibonacci extension at 127%. Remember, US 500 is trading close to all-time highs. There's nothing in the past that we can reference, right? So we have to rely on Fibonacci tools to help us identify potential resistance areas. In this case, we are using the extension tool. So the extension is found by running a retracement. So we started the retracement from the previous all-time high that was formed in the first week of April, going down to the swing low here on the 15th of April. Key extension levels lie at 137%, 161.8%. Right, so that's where the pivot has been identified. So should we see US 500 continuing to rise, it's quite likely it's going to stall around 5,381, which is where the extension level sits. And at the same time, we do see the upper trend line of the bullish channel as well. So we have the upper trend line of the bullish channel plus the pivot at 137% Fibonacci extension to help us identify a potential resistance area here. Similarly, the next resistance level is identified by the extension at 161%, which is at 5,500. And remember, this was a very strong pullback resistance back in the third week of March, final week of March. What was previously a strong pullback resistance could now potentially function as support, and that's how the first support has been identified. Okay, let's move on down to the daily time frame. Right, so we can see here, I guess we can sort of see the bullish channel much more clearer here. Right, it's not the best bullish channel because we've only seen the upper trend line being tested once or twice, and on the lower trend line a couple of times as well. Okay, it's not the best bullish channel, but it does highlight this strong uptrend here. Now, so we have the combination of the upper trend line of the bullish channel and the extension at 127% to help us identify a potential resistance area. So any long US 500 positions that you may have, right, using the combination of the pivot and the upper trend line would be a good idea to identify your take profit level. Now, of course, with this bullish momentum still intact, right, should we see US 500 pull back towards the first support here at around 5,270, right, that may help us identify another buying opportunity as well. So should we see US 500 pull back towards this first support, stabilize around here, right, then may be a potential opportunity to go long on this instrument once again. And should that happen, right, then of course we'll be looking to target the vicinity of the pivot as a potential take profit zone. Right, okay, looking at the 4-hour time frame, I don't think there's anything else that we can do. I think that's pretty fine, right? All the levels have been identified quite clearly. Right, if anything, I'll just move this up for the 4-hour time frame. I'll just highlight it, move the first support up to here. Right, we can see it running the resistance here 1st of April, and then finding support here last Friday as well. All right, okay. Let's see what else can we do. Okay, let's take a look at DAX. Oh no, Germany markets are closed, so probably DAX is not doing much anyway today. But okay, just let's get ready for tomorrow. So let's try and see what are the key levels for DAX, right? DAX futures are trading, but not the DAX itself. But yes, I don't think there's going to be much movement for this instrument today. But let's see what are the key levels so that we can prepare ourselves for tomorrow. Right, so similarly to the DAX as well, you can see that on the daily time frame, it's trading in a strong bullish channel. And this index as well has made a new all-time high, right? So last Thursday, it made a new all-time high at about 18,900. And the previous all-time high that was set in March was at around 18,570, which has now clearly been broken. So what was previously a strong pullback resistance could now be used as support, which is what is being used to identify as the first support. Similarly, with DAX trading close to its all-time highs, there's nothing that we can reference in the past, right? No swing high resistances or pullback or overlap resistance levels that we can reference from the past. So we have to rely on Fibonacci tools once again. So once again, we are relying on Fibonacci extension tools. So we found these extensions by running a retracement from the previous all-time high on the 2nd of April, going down to the swing low here on the 19th of April. We can see that the 127 extension level is where DAX ran into resistance last Thursday as well. We can see very clearly it ran into resistance right smack at the 127% Fibonacci extension. Now we can also see that it has stabilized and started to rebound higher, right? We can see it's still in a bullish channel, so this helps us identify a long opportunity as well, right? And should you be long on the DAX today or tomorrow, right, we can take note using the pivot and the extension at 127% is a good area to identify as any take profit zones for any long DAX positions that you may have, right? And of course, should the DAX surpass this all-time high that was set last Thursday, then the next resistance is likely to come in at around the Fibonacci extension at 100, pardon me, at around 161%. Okay, let's see, is there anything else we can do? Oh yeah, there's a Fibonacci retracement as well. We've used the retracement from this swing low here, 19th of April, going up to the all-time high of that was set last Thursday. I believe, yeah, the 23.6% retracement here that we see. Oops, okay, it's not very clear. Let me try and adjust the labeling. There we go. We can see the 23.6% Fibonacci retracement sit around here as well, right? Combined with the pullback support here. All right, okay. This is what we have for the DAX, right? What else can I see? All right, okay. Before we wrap up, and we still got time to cover another one or two more analysis. But before we do that, I'm just going to launch a poll. I truly appreciate it if you guys can give your feedback with regards to today's seminar, right? All right, just launched the poll. Truly appreciate it if you guys can give your feedback as well with regards to today's session. And then we'll wrap up today's webinar with another one or two more analysis as well. All right, okay. Let's see what have we covered. We've covered a couple of the indices, commodities, gold, major currency pairs as well. Okay, maybe let's just cover the euro, right? Of course, let's cover the euro. Right, we'll wrap up today's session by looking at the euro here. Right, so similarly, we can see the euro has been in a strong bullish uptrend as well after stabilizing around 1.0630 in mid-April, and we can also see a pretty good case for bullish channel over here as well, right? And it is trading close to where a major resistance sits as well, right? You can see there's a major resistance here for the euro at 1.0851, right? Previously, this was a pullback resistance that occurred on the 9th of April and then ran into resistance last Wednesday and Thursday as well. So it's where it ran into resistance once again today, right? So we have this pullback resistance level as well as the upper trend line of the bearish channel as well, highlighting a major resistance zone. First resistance, I would say I'd probably stretch it all the way here, right? Marking this swing high resistance here. We can see this is a very significant swing high resistance, and then the retracement here as well, right? So 1.0950 is a significant swing high resistance level, which you are using to identify as the first resistance. Pivot here, right? So because it is still in a strong bullish channel, right? Any reaction of the pivot and a drop towards the first support and the lower trend line of the bullish channel may identify a buying opportunity as well. All right, okay, just gonna close the poll as well. All right, thank you everyone. Right, okay, all right, now let's go on over to the 4-hour time frame and see if we can fine tune the analysis. Okay, wait, we don't need this here. Right, okay, looking at the 4-hour time frame, right, we can see, right, it's ran into resistance at 1.0851 on 9th of April, last week 16 as well, and today as well, right? So this does look like to be a near-term headwind resistance level here, and we see a pretty decent overlap pullback support level here as well. Right, I think we can run a Fibonacci retracement from this low on the 1st of May going up to the high here. We have a 33.6% aligned very well with the pullback here at 1.0840. And the next support level, right, if this first support at 1.0840 doesn't hold, it's likely to be around this overlap here at 1.0800. Right, and there may be a 38.2% Fibonacci retracement. Yes, there is one there, right? All right, so these are the key levels for the euro on the 4-hour time frame. Right, remember most European markets are closed today, so there's not much action or not much trading range going on, right? As the trading activity is rather subdued, but that may change as US markets come online, right? So with the euro still trading within a bullish channel, trading above the bullish Ichimoku cloud, right? We may see the cloud and this pullback support and a 33.6% Fibonacci retracement highlight a potential support level. Should we see the euro pull back towards 1.0840 and stabilize around this region here, it may help us identify a potential long entry for the euro as well, right? Remember, it's still trading within a bullish channel, so any pullbacks here may be used to identify as a potential entry level as well. So should that pullback occur, then of course we can target the pivot as a potential take profit level. Right, okay, so this is the key levels for the euro. Then okay, let's wrap up with the pound. Right, let's wrap up with the pound. So similarly, of course, if the euro is in a strong bullish uptrend, the pound is likely to follow suit as well, right? Especially with the dollar index in the bearish channel. So once again, we saw a bullish breakout for the pound occur last week, right? It ran into resistance here on Wednesday and Thursday before finally breaking out of this level or this pivot level on Friday, right? And closing above it as well. And today, this currency pair has managed to stay above 1.2677 as well, right? So we have a potential bullish breakout on that's currently in place or taking place now, and then where we could identify a potential take profit level would be around the upper trend line of the bullish channel and where the 78.6% Fibonacci retracement sits. There's also pullback resistance at 1.2786. So three factors pointing to a potential take profit level or resistance zone. And at the same time, any pullbacks towards this pivot level here may help us identify buying opportunities as well. Right, let's drop down to the 4-hour time frame and see if there's anything else that we can identify. Okay, based on the 4-hour time frame, probably this would be the pullback, the pivot here, right? This pullback support level here, right? cable found support here on 16th of May, 17th of May before bouncing higher. So any pullbacks towards this level here, which also sits above the bullish Ichimoku cloud, may present itself as a potential buying opportunity as well. Right, what else can I do? Is there any other levels to identify? No, probably not. All right, I think this is what we have for today. All right, okay, so that's what we got for today. Right, thanks everyone for tuning in to today's live analysis session. All right, take note of the calendar for this week. We've got quite a few things going on. Right, tomorrow we've got CPI data out of Canada at 12:30 p.m. GMT. Right, so should we see inflationary pressures in Canada continue to dissipate, that means if it continues to head lower, that's quite likely going to function as a bullish catalyst for dollar CAD. So we may see a strong rebound in dollar CAD tomorrow. Right, we've also got several policymakers speaking from the Fed, from the Bank of England. Right, Bank of England Governor Andrew Bailey will be speaking tomorrow as well. And then on Wednesday, 22nd of May, the RBNZ will release its monetary policy statement pardon me, at 2 a.m. GMT, followed by the press conference at 3 a.m. And it's widely anticipated that they're going to maintain their cash rate on hold at 5.5%. However, the statement and the press conference could be pretty dovish, and that may be sufficient enough to cause the Kiwi to pull back quite sharply. Right, we may see the Kiwi reverse quite strongly on Wednesday and head lower. Right, head much lower. Now, of course, should we see a surprise rate cut take place? Remember, New Zealand is in a technical recession, right? Third and fourth quarter of last year, the country ended up in technical recession. PMI numbers aren't great either, so maybe there's a potential surprise rate cut by the RBNZ. So should that happen, right, then of course Kiwi is going to sell off hard as well, right? Although it's quite unlikely for a rate cut to take place, but remember that's why they're called surprise rate cuts. All right, okay, remember, even though there is no rate cut and they keep it on hold at 5.5%, statement and press conference is likely to be dovish, and that should be sufficient enough for the Kiwi to at least stall and pull back a little bit, right? All right, so these are the rest of the main economic events lined up for this week, right? Thanks everyone for tuning in, and we'll wrap up with the final disclaimer. All right, take note of the final disclaimer. Right, do look out for all upcoming webinars by IC Markets for the rest of this week, and I wish you all a good trading journey. Right, have a great trading week, and I'll catch you all at the next webinar. Thank you.